What's up, guys? Mike here. Today I'm going to be going back to my tried and true method of investing, and that is to buy and hold for long term. Today, let's go over a $200 billion market cap stock, and that is none other than Intel, which had an insane market crash on Friday. And I am going to be going over everything you need to know for this stock before you buy or not buy. I'm sure you all have seen the mega dip the stock Intel just took on Friday, losing almost 20% in one trading day. A drop like this for such a large, big name stock is absolutely insane. This is a massive decline. So let's look over why sellers are running scared while the smart people are gonna get greedy and start buying this stock right back up. This is a really detailed video. It took a lot of time and research, and I'd really appreciate it if you would smash that like button and subscribe. So with that said, let's begin. If you guys are in the market for a semiconductor stock, I think Intel is a really attractive play right now. I'll go over the valuation of the company, the fundamentals, and my thoughts on this company. So let's take a closer look at Intel's earnings just announced on Friday, which pretty much led to its bloodbath. All right, so let's look at Intel's earnings. They beat EPS by 12 cents. They beat revenue by over 1 billion, 1.15 billion. Margin growth was 54%, and they beat that by almost 56%. The last item is pretty much what shook most investors to the edge of their seats, and that is pretty much why Intel's dropped like a mother, and that's because of their next gen 7 nanometer chip processor is expected to be delayed. Oh my gosh, heavens forbid during a pandemic, God forbid something like this would happen when the whole world is practically shut down. They're gonna be delayed on their chips or by about 12 months. Oh no, such a huge drama here, Like, come on. So pretty much this is the main driving factor that caused the stock to tank on Friday, and a lot of people pretty much looks like they lost their mind on such a minuscule detail, which really I think is not such a big deal, because considering what's going on with the world right now, this is like a penny dropped in an ice bucket, all right? So it's not even a big deal that people are just selling this at an insane rate right now. I mean, I don't complain, like this is an excellent entry point for a lot of people, so why not? So let's look at this picture that I got from their website, which shows their accelerated growth, improving execution, and deploying their capital. So pretty much under acceleration growth, we see that their cloud services is up pretty much increased by 47% year over year. So yes, they play a large sector in the cloud services, as does Microsoft. They recently launched their i9 10900K, their world's fastest gaming processor, considering AMD and Intel are pretty much heavily focused on the gaming industry, and right now ATVI is doing exceptionally well. They just beat earnings in the last quarter like about 110%. So ATVI is doing great. And AMD just took a huge market share on Friday from Intel. Pretty much they took a huge piece of the prize on Friday. Like, people were selling out of Intel and moving all their money into AMD, and that's pretty much why we see a huge jump on AMD on Friday. So AMD just took a huge chunk of the market share where Intel lost out on. Anyways, under execution, we see, which caused the pretty much panic sell on Friday, Intel had some bad news, God forbid, something could come up during a pandemic, that their 7 nanometer CPU is going to be delayed about 6 months to about 12 months total, which really isn't that bad. People are freaking out on. So we won't see the chips probably around until 2022. This, I'm sure, caused most of the panic sell off on Friday, which gives smart investors a great deal of opportunity to get in very soon and take advantage of this, where old sellers are going to be missing out on. Also, another fear factor people have is that they think Intel might outsource making their chip to and use another manufacturer. And some of these investors and institutions were not happy about this. So that pretty much led a little bit more to the panic sell off on Friday, because, people think if Intel doesn't make the chips themselves, the chip might not be as good. And I can understand their frustration, because we always want our product to work as best as possible. So if someone else is making the product instead of the main company, it might not be up to par, might not be up to standards and not perform as well. So I can see some of that frustration, but I think they pretty much oversold this company by a lot. Anyways, I'm not complaining. This pretty much gives a lot of opportunities to many other investors. So this is actually a good thing. But pretty much Intel usually makes 80% of their products, and investors don't like someone else making their products. But at the end of the day, you have to look at whether you want to outsource the product and have it made and still be in a competitive company, or wait and do it themselves and lose a ton of market share to companies like AMD or Nvidia, which pretty much they started losing out on Friday to AMD. So the answer to me is pretty clear okay? I rather keep the market share that I have than lose it to my competitors, and do whatever it takes, whatever is necessary to get my product into the market and keep my profits and keep my market share in there. So obviously they might have to outsource their products. So what? Okay, maybe it might not be up to par, but if I was the company, I'd probably do the same thing. And I need to make my money, and I need to keep my market share into this competitive market. All right. Anyways, let's move back to this page that I have up. And they have about $10.6 billion in their capital of free cash flow, which is absolutely massive. It's a massive yield to date, cash for Intel. And this company has also a strong exclusive dividend. Okay, they pay $2.8 billion a year in just dividends. And because of their healthy cash flow, they can easily keep this going and even increase this over time, which is fantastic for investors. Plus, their ex-dividend date is coming up right around the corner. So I'm sure investors will pretty much rush right back in and buy their shares right back up in no time. So one of Intel's main competitors is AMD. I'm sure you guys know, and they had a massive day. They had one heck of a day on Friday. All right, look at that, 10% gain on Friday, taking a ton of market share from Intel and reaching all-time high numbers for this stock. Investors were so positive on AMD, but I'm going to be honest with you, I'd be very careful if I was you and I owned AMD, especially since they have earnings coming up right around this week. All right, so a lot of money that went to AMD will most likely go back to Intel, because AMD usually does not beat earnings. Okay, so just a cautionary warning to my fellow investors. But all I can say, AMD's CEO, Lisa Su, is an insanely amazing CEO, right? She's very good. She's has definitely turned around this company by a lot, and they really advanced AMD. All right, Lisa Su is very good, but I'm going to be putting a cautionary warning. I can tell you AMD is most likely not going to be beating earnings. If they do, good for them, but I don't have high hopes for AMD. All right, sorry to be the spoil of your week, but that's the honest truth from what I've seen from AMD. Anyways, let's move on. So let's look at some of the financial highlights of quarter two 2019 year over year. This company's revenue is pretty much as expected, has grown pretty nicely. Gross margin, sorry, is down a bit. Net income is up 22%, and EPS is up 29%, which is absolutely insane. This is all great numbers. Overall, looking at Intel's earnings report, it looks pretty damn solid. And Intel had an outstanding quarter so far, so I expect them to do pretty well into the next quarter and the end of the year. Okay, so looking at the segments and breaking down their revenue, let's go over here. Their business is a little bit struggling in a piece of the parts of the puzzle, but they're doing really well in other parts. The DCG is up 43% year over year, and SG is up 76% year over year. So the IOTG division, which is pretty much Intel's next gen division, took a massive hit of 32% and 27% year over year. The memory business NSG saw a huge boost this quarter, up 76% year over year. Total revenue is up 34% total, which is fantastic. You know, that's what we want to see. Intel has chips also for PC, which most of us probably know Intel for our computers that we use, our laptops, and that is up, as you can see, 7%. All right, so let's move on. All right, so Intel also provided some guidance for 2020 as a whole, and this is where more uncertainty came to the business, pretty much what freaked out a lot of investors on Friday. So pretty much quarter three revenue is expected to be down about 5% to 18.2 billion year over year. Operating margin is going to be down by about 6 points year over year, and EPS took the hardest hit, and it's expected to be down about 22%, which is absolutely massive, which I can tell why investors ran with their money while they still had it, but I don't know if that's going to be a great move overall. Now, looking at the full year 2020 guidance shows that they expect to pull in $75 billion in total revenue, which they will be up by 4% year over year, which is fantastic news, all right? I don't know why you could be complaining about that, all right? Operating margin will be down by 32%. That's about 1 point a year over year, and EPS will be about $4.85, which is pretty much like a flat ride this year, right? It's going to be a flat line. The stock had a heart attack, right? It's like pretty much it had a heart attack, if that's how you want to take a look at it in perspective. It just went flat, like beep. It had a heart attack. But anyways, capex is expected to be down 1.2 billion year over year, and free cash flow is expected to be a 17.5 billion for the year, which is actually up by 0.6 billion year over year, which is pretty solid numbers here, you know? Like, Intel is still doing very well. This looks like it's still going to be a pretty dang good year for Intel in 2020, in a time where pandemic is destroying most of the economy. So not much profit compared to 2019, but the business is still doing absolutely fine at the time like this. So remember, Intel isn't a high growth stock. This is a blue chip giant dividend stock that consistently grows year over year. And the bottom line is that Intel is still a very, very profitable company, and it's still making massive moves in the tech industry. So I really like Intel a lot right now. I really love Intel right now, as you can tell. Okay, so here is their balance sheet of assets for Intel, and as we can see, they have $8.7 billion pretty much in cash. And when you add up their total asset, it comes out to $44.3 billion and 152.5 billion in total assets. In total liabilities, let's move on and I'll show you that. So considering their liabilities, they did raise it to 2.2 billion, and total liabilities is about 22.4 billion. The company has twice the size of assets versus liabilities, and this is a really healthy and strong balance sheet. Okay, remember, they do expect to have 75 billion in cash flow just this year. They will continue to increase and rise over time. So in my opinion, I think Intel is in a great position to make a huge comeback, and I don't think anyone should miss out on. Intel has over $10 billion in cash flow every year, so they will easily take down their debt relatively quickly. They are in a way better position than IBM, in my opinion, which took a massive hit also in earnings this week. So I think because they have twice the assets than their liabilities, they're perfectly fine. Their balance sheet is completely healthy and strong. So I doubt they'll be going anywhere anytime soon. Anyways, I did want to show you guys some new PR press release that has been come out. Also, what's going on is Intel and Skyworks have been working together to co-develop the 5G system solution, which pretty much Apple is going to be using for their next gen iPhones for their 5G network from Skyworks, and Intel is co-developing it. So make sure you keep your eyes on this, because not only will Skyworks continue to go up in value, Intel will as well, because Apple right now is one of their main investors. They're going to be using their 5G networks. So keep your eye on this one for sure. Anyway, so I did promise you guys my valuation of Intel, and based on their dividend yield history, Intel has an average of about 2.5% yield, and before they were below that, which right now it's putting them in a really good position, and I think they soon will be over 3% in no time. So this is looking good to me. Let me break it down a little bit further for you guys. So with that dividend yield that I showed you, this would put the stock price at about a $43 to $44 a share before I would consider buying. And they have a strong support level, as you can see, around 43 to 44, right? So don't expect it to dip that low, all right, or lower than this, because this is a huge support on several levels, right? Boom, 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 boom. I see 6 levels of support already for this stock. So this, I don't expect it to go any lower than $43 to $44. That's where I would pretty much pull in and start buying shares up by a lot. Let's move on to their PE ratio. So the PE ratio, as far that it's concerned, Intel has pretty much solid, and anything under a 10 PE is a good valuation. That's pretty much around a $43 to $44 price target per share would be great deal. I think it would be fantastic. Anyone who gets on that should jump on it right away. I love Intel at that price, and now I would hold this for long term. I told you at the beginning of this video, this is gonna be another method of my investing, which is to buy and hold, and it's a true and tried method, and I highly suggest people to do that, to buy and hold for long term and always average down, because that is the best solid move you can do for long term and over time, and to increase your wealth. Anyways, Intel right now is about a $50 per share, which is still a pretty dang good price tag, okay? But I personally would have a 3-day period, which I call it the 3-day rule, where if a stock drops by about 10% or more in a single trading day, I would not touch it for at least 3 days or later. Why, you ask? Because pretty much Friday, a lot of people sold a ton of shares, and some people didn't have time to check their portfolio and see what happens. And now they're going to go home, check their portfolio, see, oh my gosh, I lost over 10% in Intel. And guess what's going to happen? They are going to go and start panic selling their shares the next trading day, which is going to continue another loss for Intel for the next few days. So that is why I have a 3-day waiting period before I would ever consider jumping into buying a stock. And that is pretty much why I came up with a 3-day rule. And that's when I'm going to be starting to buy up any shares, even if it drops to 43, 44 within the next trading day. All right. I see some justifications as to why someone would go into this and start dollar cost averaging at $50 right now, and plus the ex-dividend day is just right around the corner. So I really expect Intel to go right back up in absolutely no time. Don't expect it to right away hit 60 again. That is absolutely ridiculous expectations. There could be a small acquisition Intel might consider doing, buying another company just like IBM recently did with Red Hat, and they might consider doing that to diversify its technology hardware, some consulting business into some higher margin products and services. They might think about doing that. They do have the cash flow to make a small acquisition purchase in another company like IBM did with Red Hat. So don't be surprised if Intel makes money moves like that, because I can see that coming up, especially with that press release. It could happen anytime soon. Don't expect them to buy Skyworks because that would be ridiculous. But I do see Intel making some crazy money moves in the very next future. I do see a huge future for Intel, and I do expect Intel to do very well by end of the year. With that being said, thanks again for watching my video. As always, make sure to smash that like button, hit that subscribe button, hit that notification bell so YouTube could alert you when my next video comes out. Also, leave a comment below. Let me know if you guys have been buying Intel on Friday, or if you plan on buying any Intel in the next couple of weeks. And let me know if you have any other information that you think I should consider as well. Also, if you want 2 free stocks on the stock market, WeBull is giving 2 free stocks. One for just signing up to use their platform, and a second stock when you make a deposit of $100 or more, and they'll give you a second stock worth up to $1,400. Also, WeBull right now has a promotion going on where they give you about $1,200 worth of shares of the Coca-Cola stock. So check out WeBull, link in the description below. Also, Robinhood gives out a free stock. All you gotta do is sign up for their platform, and they'll give you a free stock for joining Robinhood. Thanks again for watching my videos, and until next time, make money with Mike.